Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me to discuss financial markets and how financial advisors are doing amid COVID-19, we have Samir, Vasavada, and Runik, Mehrotra, the 20-year-old co-founders of Vise, a platform for financial advisors that just raised $15 million in a Series A from leading VCs like Sequoia Capital. Samir, Runik, welcome to Trade Talks.
Thank you so much for having us.
All right, you got it. Thank you. And before we get into financial markets and financial advisors, tell us more about Vise.
Yeah, so EssentialAdvises is an AI platform to automate investment management for financial advisors. So we can essentially analyze a client's investment needs, how much money they have to invest, goals, net worth needs, build highly personalized portfolios of individual stocks, bonds, other assets tailored to their needs. We then provide the tools to automate the management of the portfolio, like rebalancing and tax loss harvesting, with the intelligence to explain portfolio decisions. So you can almost think about us as a highly personalized, highly automated approach to wealth management for investment advisors.
Yeah, the thesis of the business is that the vast majority of wealth management is delivered via financial advisors and will continue to do so. And rather than using artificial intelligence to replace humans, we use it to empower them. And we build tools and technology to help financial advisors be better at their job and provide more customized offerings to their clients.
Right. As most clients have more complicated financial needs, they need portfolios that meet those needs. So the same kind of generic model approach to investment management will no longer work as clients have more complicated needs. And we are delivering a much more personalized way for advisors to give that advice.
Yeah, that's an important distinction to make, that you're using the hybrid combination of the two. What was it like raising money during a pandemic? And tell us about the unique challenges you may have faced as younger entrepreneurs.
So I think the interesting challenge with being a young entrepreneur, which is also a benefit, is this lack of experience can sometimes bring new perspective. Right. So as someone who's been in the industry for the last 20 years, we'll see it, okay, here's how I can make a slight improvement on my prior experience, as opposed to looking at the industry with a new perspective and saying, okay, this is how things should be done. People had said like, hey, you guys haven't been in the industry for, X number of years. You've been alive for that number of years. So I think, we were able to say, hey, no, that's why we have this new perspective and, have this new product.
Yeah, and I think during the pandemic, it was definitely incredibly interesting. And the way that we were thinking about raising capital was around the longevity of the business, but also how comfortable our clients would feel. And so going into the pandemic, we actually had a lot of runway for the business. But we wanted to send a signal to the markets and to our customers that we're going to be around for them for a long time. And so, with the capital raised, we have 5 years of runway, 5 to 7 years of runway, even as we scale the business. And so it's kind of partnering with our current advisors, our customers and future customers, that we're going to be here, even if there is a significant market turmoil.
All right. And before we get into how advisors fared during the COVID-19 volatility, how did you do this with school? What was the process like?
Yeah, great question. So, the process was, I'll say, gradual. We had discovered this niche. We were working on consulting projects with large investment banks. We'd done a prior startup in AI research and realized that, artificial intelligence applied very well to financial services. And then during these consulting projects, we saw the niche in the financial advisory space and just how big of a market was, how fragmented it was, and how big of a problem there was to be solved. And as we started to explore, we realized the opportunity and dove right in head first.
And how do you think advisors fared during the COVID-19 volatility using this type of hybrid approach, combining AI platforms and the physical job of being a financial advisor?
Yeah, I think what's incredibly interesting about COVID and the impacts that it's had on the industry is early on, I think it had pretty shocking impacts. Advisors weren't taking client meetings. They were, for the month of March, canceling demos with us. But the month of April and May were incredibly different. Advisors saw a huge influx of number of clients, especially as people looked at their financial picture and saw that it was down, their net worth was down 15, maybe even 20%. And realized that they needed a financial advisor to help them through this process. A lot of people that were doing it yourself, kind of stumbled through the pandemic, stumbled through the months of March and early April, and then decided, okay, it really makes sense for me to go to a financial advisor. They do this on a day-to-day, they're experts, they can help me through my financial picture. And those advisors that saw a huge influx of growth, we also saw that same influx. And we saw tons of advisors look to reevaluate their technology stack and say, okay, I'm getting an influx of clients. I'm free at home right now. My kids are annoying the hell out of me. Like, let me spend some time, trying to get to know new platforms and use specific platforms.
Right. And during times of market uncertainty is when most clients, can see the need for an advisor, right? Most advisors can, act as this calming mechanism for most of their clients, new clients, and help them kind of explain what's been going on. So advisors saw quite a bit of client growth. And, during that, they said, okay, what platforms can help me better explain this to my clients? And, they saw us as one of those solutions.
Are you seeing demand for ES-driven strategies?
For sure, especially amongst kind of our generation. People want to invest alongside their values. So there's definitely an excitement around ESG and delivering that across all of your portfolios.
All right, and to wrap up here, thoughts on the markets and recovery outlook as we move to the second half of 2020?
Yeah, for sure. I think it's going to be incredibly interesting because we have like these two segments of the market. One is the high flying technology stocks that have completely recovered from the COVID pandemic and are actually making gains well above that. And then you have this second half of the S&P, which has really struggled. Airline companies, hospitality companies, almost like the old world of the economy has still continued to struggle. And as we saw with a lot of the market numbers come out around the economy and jobs, it's clear that the market hasn't continued to recover to the scale that we have expected. And so it's going to be incredibly interesting. I think the market's going to continue to bifurcate where we have large technology stocks continue to grow significantly. But it's going to be a rough time, in our opinion, for that second half of the market that hasn't grown nearly as much and hasn't recovered nearly as much as the market may think.
My perspective is that second half of the market is going to rebound. People are going to get back to their habits, and that means traveling and hotels and cruises. And I think that'll pick up probably early next year.
All right, Samir, Runik, it's great to have you with us on Trade Talks. Thanks so much for joining.
Awesome. Thank you guys so much.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.